When I came in, I can only talk for the last 2 years, and you did talk to my predecessors, but I can only talk for the last 2 years. It was clear to me when I did an assessment of the company that the structural challenges within asset management were very well known. So man versus machine playing out, indexation, ETFs, thematics, and it was necessary to be able to take the business into areas where democratization of finance, better use of technology, better use of platforms, access platforms and network effects. And if you look at our numbers, and I'm sure you will do the comparisons, in fact, it's in a year of tough markets, it's all about relative performance. We performed relatively very, very well in 2022. And yes, it was volatile because we saw the opportunity to execute against democratization of finance, which is essentially what Interactive Investor does. We saw the opportunity and we had the conviction and the capital to execute against it. But what's important is that for my tenure, 2 years into a 3-year strategy, I would ask everybody to ask the question, if we're doing things differently, and we are, have we made material progress? We have really made material progress. Do we have the capital to continue that journey? Today we're reporting our results and we still have £700 million of surplus capital plus 1.3 billion of stakes that sits outside the capital stack. So we have got the capital legs to execute against what is now recognised as the right strategy in a sector that is facing pressure. So you don't stay as a boiled frog in a sector that's facing pressure. You reconfigure, you create a shape for growth, and you execute against it. Stephen, and judge me by my execution.
Stephen, talking about that execution, obviously alongside the earnings this morning, the announcement around the sale to LGT of the capital business. Can you tell us a bit more about what's happening with the private equity operation, and is Santander the likely buyer at this stage?
So let me deal with the first part of your question, Jeff. Yeah, I'm very pleased to announce that we sold our traditional discretionary fund management business this morning. And we did very well. You'll see the detail reported around that. I have been able to sell a series of businesses. And why did we do that? We did it to become much, much more focused. And we're focused where we've got scale, fixed income, scale, specialist equity, Asia, emerging markets, and scale in alternatives, almost 80 billion in alternatives. Think real estate, think logistics. I acquired the Tritanks business, which is Amazon's landlord. So if you think about those things, the question you're asking about the private equity and what's reported in the press, I can't comment on because I can only talk about the deals that I've done. And the deals that I'm still working on, I can't give you as much detail on, unfortunately, Jeff.
Yeah, I mean, can you give us anything, though, on... Well, I'll tell you what, I don't think I'm going to make much progress on this one, given the straight bat you've played back to me. So let me just ask you a different question. We're talking about the month-end numbers this morning. It's obviously been a challenging year to date, but actually markets have ground sideways and higher. Give us your view of what you think unfolds for capital markets through the rest of this year, given the China reopening as a positive, but the likely increase in interest rates as a result of sticky inflation as a negative. How do you think you'll do in that kind of period?
Yeah, no, thanks for that, Jeff. Well, you're right. There are tensions playing out. There are positives and negatives. There's a tremendous amount of uncertainty still in the environment. We still have war in Ukraine. We still have the battle with inflation going on. And our base case is that the Fed is going to continue to raise rates, because underlying inflation, core inflation, is still showing evidence of being sticky. So in that environment, you've got to be very, very selective in where you invest. Now, China reopening, China is a massive economy. China reopening is happening. We have our people on the ground there. We had our CEO sitting in Beijing, Shanghai last week. because we've been investing in the Far East for the best part of the last 40 years. China reopening, particularly in the second half, I think will be very evident. Now, you've got to be able to choose your spots there. We have our China A-share fund, top quartile, top quintile, in fact, over 1, 3, 5 years, where you're investing in China for China, because you think about how do you manage to invest in China without being caught up in the supply chain.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.